morning, this is Sterling Smith with ASDE Edge, and welcome to the February WASDE crop report. I'd like to thank everyone for taking their time and joining us today. Today's report usually doesn't feature a lot of big changes necessarily. Generally, expectations were for the report to stay pretty much the same. But we have a bonus today. We do have the CONAB report, which came out, and this covers Brazil, which is actually probably going to be the most important part of today's USDA report as well. And as you can see, CONAB took Brazilian soybean production down to 149 million metric tons. We started the year at 162 million, and we have been gradually coming down due to weather issues, and there's been some new concerns now, specifically about the ability to harvest or maybe seeing some harvest delays due to some untimely rains. My one caveat on this is something about CONAB reports. We tend to see soybean production start out the year very, very high. We see it drift a little bit lower. And then when they actually get the beans harvested, things change a little bit. Right now, harvest is about 18% done in Brazil. So it's really not a full and accurate sample, but that is something I think that is helping out soybeans today. Moving along here, as you can see, for corn production, this is now down noticeably. We're at 113 million metric tons, which is kind of in line with what we had seen in previous years. Here again, we started the production starting the year around 128 million tons. And we have come down noticeably, again, due to weather concerns. My caveat with this is most of the Brazilian corn that gets planted, the major portion of the crop, is not something that went into the ground early. It's stuff that's going in the ground right behind these soybeans that they harvest. So there are probably more unknowns than there are knowns with that. And that is something that will create some volatility issues, I think, depending on how that plays out, because the world is obviously quite dependent on how big this crop is going to be. And moreover, any chances of a spring rally are going to be dependent upon what happens with this corn. And other items that we have, we did have export sales today. Exports are the one area outside of South America that I do think we can change on today's WASDE. In my own estimates that I submitted, I lowered ending stocks by 10 million bushels across each item by increasing exports a little bit. We have seen a little bit of a perk up in export sales, particularly for the wheat market, which we saw China come in and purchase a lot of wheat. By the same token, there is some nervousness around whether or not they're going to be buying more wheat from Argentina, or we're actually going to see coming out of Brazil. Excuse me, I'm having a little few vocal problems this morning. The big surprise, actually, for export sales has been cotton. Cotton has done remarkably well. We have seen a decided increase in cotton export sales, particularly to China. In fact, if you look at today's DMO, you'll see a chart of the cotton exports to China and how much they really have improved. And as far as soybeans, they were a little bit under par. Excuse me one moment, please. They were a little bit under par this week. But again, we had seen some pretty good numbers. We saw very good soybean export numbers. Go ahead and make this a little bit bigger so we can read this a little bit better here. So the estimates that we're looking for today's crop for corn ending stocks, last time around we were at 2162. The survey has us right around 2150. So if you make that into round numbers, again, taking about 10 million bushels off. And again, they are not going to address any sort of production issues, anything going forward about new crop. Again, excuse me, I'm a little under the weather. So none of those numbers will get touched. So the only changes they can really make from this report will be coming off of a change in exports. So looking at soybean ending stocks, the current estimate is we're going to come in at 284 million versus 280 million. And the export estimates right now are at 17.4, which from the survey actually has us taking down soybean exports. Typically, if we see China come in and buy additional soybeans, it'll be sometime post-Lunar New Year, which Lunar New Year is this week, so they're not going to be in here buying. I am guessing just because of the size of the exports we saw to China this week and these ideas that Brazil's crop is going to tighten up, there is the potential that China could increase their imports of soybeans a little bit. Now, this isn't going to be anything that's going to produce an enormous rally or anything, but we could move that needle the right way, assuming that these CONAB numbers do, in fact, bear fruit and possibly go a little bit lower. For wheat, right now, all wheat ending stocks are projected to be 647. Last month, they were 648, so not looking for any changes there. I did bump up my estimates on what wheat exports would be just based upon the Chinese activities. And maybe we're seeing a few crop issues here and there that might be enough to improve our exports a teeny tiny bit. But again, we're not going to be moving any major needles with that on this report. The other big items that we're going to be looking at today are down here. We're going to be looking at Argentinian corn production. If we're going to see a hike in Argentinian corn production from the WASDE, most likely it's either going to happen this month or next month. Right now, the street estimate is at 55 million tons. That is where we were last time, so not looking for any changes. This is the largest number we have seen in many years coming out of Argentina, and the first time in several years that they've been able to actually have a pretty solid crop. Moving on to Argentinian soybeans. Hey, there's Brooks. Brooks wants to talk a little bit because my voice is about to collapse. Can you hear Brooks? Can't hear Brooks.
Sure, because I'm not aware of this board addressing it. And certainly it's changed it so that it's not after the election. It's 3 days before the election based on the fact that the polls in that state look bad. Can they do it?
Okay. All right, Brooks, how's your audio? So I'm moving on. I'm looking at WASDE ideas for corn production from Brazil. Right now, the USDA was at 127. The survey is at 124. So we're seeing a pretty good change in size there that we saw from CONAB. So right now, CONAB 113. So we're looking at 14 million tons of a differential. That is a pretty good amount of difference, and most likely will probably fall somewhere in the middle there. But again, need to pay attention here because most of the Brazilian corn production is actually will be done with their second crop, their safrinha crop. For soybean production, we're looking 157, USDA is at 153. So right now the USDA is still about 4 million metric tons ahead of where CONAB sees their current crop. And again, that's not too surprising given the way CONAB generally reports this. So we are just about 4 minutes away from the report. And let's take a look at the markets here. So looking at pre-report action, we've got corn down 2 or 3 cents. Currently, as you can see, the life contract low is 432 3/4, which was set yesterday. It hasn't been amended, but right now we're at 431.5, which is a new life contract low, and actually with a low of 430 1/4. We have seen over the past few sessions, when we start brushing up against these lows, we do see some fund buying coming in or some short covering action, maybe some bargain hunting, a little bit of buying pressure. I will note that the funds have been selling corn and they've been big sellers of soybeans since the middle of November. In fact, in the middle of November, we had about 54,000 net fund logs, and it's turned around, and now we've got about 145,000 net fund short. So they have sold a couple 100,000 contracts in here. For soybeans, going to the March contract, that $12 level is kind of the fulcrum. That is where the market seems to be finding balance. We break below it a little bit and we find somebody to come back in. We can't seem to get away from it, but as long as that area can hold, that does pretend that we've maybe bottomed out. And that doesn't mean we're going to get a big rally straight away, but what that can mean is if funds aren't making money and the beans stubbornly hold around this $12 level, perhaps they can get a little bit bored and they'll start covering the position and take a little of that pressure and maybe get us to move a touch higher. As far as new crop goes, right now, new crop is still very much subject to the whims of old crop. We'll be getting some USD outlook numbers here in a couple of weeks, and then we'll get the prospective plan report and have a little bit better idea about where we're going, and new crop will start trading a little more independently. Wheat, the struggle is real once again. Chicago wheat has, again, that $6 level has been important. We traded as high as 602 today. And again, the market cannot really hold that very well. And that in turn is leading to some selling pressure here. And that's certainly not doing anything for corn. Cotton, as far as, things that grow in the ground, we won't talk about cattle or hogs here, but cotton has been the superstar of agriculture over the first quarter of the year. We have seen decidedly better Chinese imports of cotton. The chart looks very good on that. Some better export sales, some ideas that we are going to avoid a recession, and a lot of Chinese stimulus being pushed into their economy, which in turn does indicate that maybe we can see clothing sales improve, and eventually that will lead to better cotton prices. So we are right in front of the report here, which is 30 seconds away. So we're going to go ahead and bring the screen up. And get 4 new stocks right here at the top, and we'll go line by line here. What happens here? So we're about 5 seconds away. And there we go. Oh, a little bit more bearish than expected. 21.72. And if we look at exports, those were left alone. So probably had to cut some domestic use. That could very well be ethanol. Soybean ending stocks, ouch, 315. That is kind of a rough number. And they added 35 and they took it away here from the exports. We're at 1720. So we missed by 35. Wheat ending stocks a little bit higher. We're at 658, so they increased that by 10. And as far as wheat exports, they left those alone. So again, something in the ending consumption number, probably a problem. Cotton ending stocks, that's at 280, so that is more or less a little bit of a cut. So that is a little bit of a bullish number for the cotton side of things. Moving down here to those important Argentinian and Brazilian numbers. Argentina for corn, 55 unchanged, old crop left the same. Soybeans, 50 unchanged. Brazil, 124, so pretty much in line with expectations. They did take it down a little bit. And soybean production for a new crop at 156, they took that down just a smidge. So let's see how the market thought about all of this. Let's go ahead and switch screens here. And corn basically unchanged. We're down about 2.5 to 3 cents. That's about where we were when the report came out. Soybeans, well, we were up 10, 12. Now we're only up 3 or 4, which actually, given the size of the hike of that, I think is actually kind of impressive. And wheat, not much going on here, down 11 3/4, which is exactly right where we were prior to the report. So I'm not seeing a lot of big movement or anything here really to drive prices. The report, we could probably characterize it as being a little bit more bearish than expectations. But again, expectations weren't for much, and we're definitely living up to that level for this report. Did we have any questions, Katie?
No, I'm not seeing a question, just really a statement. Really hard time for farmers right now. Optimism is very low.
Yes, it is. Things are, in fact, not what they have been for the last 3 years. And that is a reality that we're going to have to work with. One thing about trading is we can't be emotional. We have to always be rational and deal with cards that are dealt to us. And what I'm instructing, and the best things that I can offer, is we are going to get little spiky rallies in here, and we need to be fully prepared to take advantage of those. That is about the best thing we can do right now until we see something to move the South American weather, or worse, the North American weather, into a situation where we see some production come down. One thing when it comes to these spring planting numbers, marginal acres are going to be very, very marginal this year. I do think we're going to see, definitely fewer acres for corn going in. Some of that's going to go to soybeans, but we can see that total box of acreage come down a little bit. That is something that will provide a little bit of support for prices. But as long as we keep these balance sheets north of 2 billion bushels for corn, north of 300 million for wheat, or excuse me, for soybeans, it's going to be very, very hard to get much of a lift off in prices for the next 12 to 18 months. There are some good things about soybeans going on. We've increased crushing capacity. The need for meal exports are very good. The use for soybean oil is good. So there are some things on the horizon. But for now, we're going to have to be opportunistic and practical. Watch your basis and pay attention, because if we get, a decent little rally, we need to be prepared to take advantage of it, because those rallies are going to be fleeting. And that is just, I'd love to be sitting here talking and telling you that corn's going to go to $6.25, but I can't in good conscience say that, because unless we see something to happen to bring that balance sheet down to about 1.7, meaning we lose 500 million bushels of corn, there isn't going to be anything there to drive it. We could see some increased Chinese buying of corn, particularly since they're trying to stimulate their economy, which is terrible over there. It is terrible with a capital T. One of the ways that they do that is they want to keep everyone happily fed. That's something that could produce at least a fleeting rally if we see them come in here and start buying additional corn to try and drive their pork prices down. So again, rewards are going to be smaller this year, and it's going to be a tougher game. But make sure we're reading the DMOs. Make sure we're listening to the podcasts on a regular basis, simply because when these opportunities show up, they're not going to be as big as we like. They're not going to last as long as we want. So that is the hand that we have right now. But the good news is eventually this too will pass, and this too will improve. And do we have anything else? Can we hear from Brooks at all? Brooks is in Minnesota today and giving a meeting. And if everyone there in the meeting happens to be listening to this, I'm sorry that I couldn't make it up, but unfortunately, our dear friend COVID caught up with me this week, and I am, as you can tell by my voice, not in great shape today. So the markets are holding on fairly well here. And with that, if we don't have any other questions, we can go ahead and conclude today's meeting.
I don't see any other questions, Sterling.
Okay, well, I appreciate everyone taking their time. And again, make sure to read the DMOs and listen to the podcasts. And thank you very much.